Good morning, everyone. Andy Tuttle here with the Tuttle Group at Fairway. Hope you're doing well, having a good week, and ready for a good weekend. The weather's great. I just wanted to do another DFW market update. We do it every week just to make sure you know what's going on in the market, how that affects interest rates, and how that impacts you when you're looking to buy or sell a home. We had some news this last week caused a little bit of volatility in the market. We had the jobless claims came in at 298,000. Which was way higher than expectations, about $60,000 jobs higher. But we got to remember that 52,000 of that were Texas claims for Hurricane Harvey, which is a major tragedy. I know we got Hurricane Irma coming this week, and we wish our best to all the family and friends out there in Florida, everyone that's going through the tough times. But that's what happened with the jobs report. So it didn't really affect the markets as much. Now, Trump did. The administration came in and extended the debt ceiling, and they also agreed to extend government funding through December 15th. That actually helps stocks a little bit, put a little bit of pain on bonds. More importantly, which we'll get to in a minute, the technicals are looking a little bearish for bonds. Excuse me. One thing that did help bonds this week was North Korea announced their underground test is the most powerful test they've done. Nuclear threats still reign, and because of that, that usually causes a flight to quality. So we saw a little rally that helped, and overall in the week, it was a pretty good week for bonds, but let's talk about what's going to happen and what could happen next week. So again, this is a bond chart, so the higher the price, the lower the rates. We can see a nice climb, a nice roller coaster up for the last couple of months here. But what we have to look at now is this was a short week. This was Tuesday, Wednesday, Thursday, and Friday. And what we saw is that the rally from the nukes talk on Tuesday, but then again, tried to climb up, but we've hit this ceiling now, this big red line right here twice. And that becomes, what that became to on Friday was a dark cloud cover. That is a bearish signal in the candlestick charts in the markets, and that is not great news for coming next week because it's a light news week, and it doesn't look like we'll have anything but technicals really dictating what will happen next week. You can look and see that we haven't reached these heights since post-election, just a few days post-election. We have not seen these highs in the price market, lows in the rates in over 6 months, so almost a year. And so it's very, very dangerous territory, you'd say, up here. Its bonds are poised for a reversal. So if you get contracts this weekend, know that if you've really been pre-approved at any time since July, rates are going to be better for you, and that's great news. But if you get a contract this weekend, make sure you're talking to your lender, if it's not us, as quickly as possible, because you want to get yourself in a position to lock going into next week. So don't mess around up here, right? It's lonely at the top. So be in a position. Don't get greedy. This is a good time to lock. Be excited about the terms that you're getting and be in a good position to lock. And if you're looking at refinance right now or having friends do, this is a great time to consider. Don't dawdle on this stuff, because when it reverses, sometimes you got to wait another 3, 6, or as you can see, 10 months just to get back to where you were, and that's a lot of savings lost. So good luck out there. Remember, to call us. We're just a phone call away, or email us if you need help with your offers, questions on your pre-approval, want to see some updated terms just to make sure you're getting into the house at the terms that you need to make it work for you. Happy hunting out there, and we'll talk to you soon.